Hey traders, and welcome to Stock Talk on October 23rd. You're looking at SPY, which tracks the general market movement, which is the S&P 500 on the yearly chart. Now, I'm going to go back on the previous Stock Talk, the weekend Stock Talk, and what did we say? We were favoring a bounce off of the support level and a rally back to the upside. Now, we'll talk about that in a moment, but you can certainly see the bounce from our support level, right? That's the first thing. And the second thing is, wasn't today just a textbook case of how technicals was coming in part with what I've been teaching inside the course the whole time? And the people who've taken my course know exactly what I'm talking about. First of all, let's take a look at specific levels. Yesterday, from Monday to today, this morning, SPY, or the broad markets, gapped lower, right? Here was the gap, right? We closed around 275 and we gapped and we opened around 271. That was the case today. But what happened? During intraday, we did push lower, but we managed to push higher and fill the gap before what? We met resistance and pulled back a little. Is that a surprise to anyone? No, it shouldn't. And at the same time, remember the scenarios I talked about last week, right? And the weekend Stock Talk. I am favoring a bounce off of this level. And today was yet another confirmation that we have buyers around this support area. We have buyers around the support area. And that's why in my previous Stock Talks, in my weekend Stock Talks and last week's Stock Talks, I'm not favoring a drop to 258 to 261. Is there a very tiny percentage in the back of my head that we could drop there? Yes. Am I favoring that's going to happen? No. Now, today we did push higher, right, intraday, and that's a good sign. That's another positive sign that we are in a what? A bottoming process, which is what I've been talking about with the members. Now, here's the deal with this. We're forming this process, right? Can we come down tomorrow and retrace a portion of the move done today? Of course we can. Volatility is going to be here, in my opinion, all the way up to midterms, possibly even a little longer. We'll just have to see, right? It's going to be here. And the thing is, there's going to be a range in which we can trade, right? The range is between support levels of around 269.70 up all the way to around 280. So you might be like, well, Kevin, isn't that a very big range? Can't broad markets move significantly inside that range? Yes, that is correct. Broad markets can move significantly within that range, but at the very least, you can see where our support areas are, right? So if you're not day trading, you have a potential opportunity to enter, even if you're swing trading. So I think a lot of people are talking about how it's difficult to swing trade. Well, now I can talk to you guys and say that it's easier to identify where a swing trade can occur just based off of today's movement. So that's what I'm seeing. And of course, in the near term, sure, we can fluctuate in this area all we want, right? But today's action was a further confirmation that we are likely to rally somewhere off of this low. Can we dip lower? We can, but we really have to monitor that on a closing basis, not an intraday basis. That's what I'm looking for in the near future. Let's take a look at TVIX, or volatility. And volatility, can you guys see how we hit the 50? We went over the $50 mark actually at one point, and we sold off, right? So can volatility continue to push higher? Of course it can, but you want to place caution, especially I told you guys, let's take you guys to the, the 10-day, 30-minute chart, right? I told you guys this boxed area represented the area of resistance. Can we break through it? We did break through it today, right? We gapped over it. That's one way to break through it, right? In order to break through a resistance area, of course we can gap over that resistance area, but this is volatility. So you have to be quick-witted, right? You have to be quick, and you have to, if you're entering a position, you have to know, got your profit, know when to exit. That's the whole point about this. So, I still have this boxed area. I still have a resistance line up here just to tell people that, if you're going into volatility at that price point, especially if you don't have day trades, it's a sign of caution. Are you sure you want to do that, right? And that's sure, volatility can go to $55 or higher, right? But at the same time, you just want to be cautious because you want to play your risk versus benefit, right? And if your risk isn't worth the amount of reward that you're going to get, you're probably or shouldn't take that trade. So there's volatility for you guys. All right, let's take a look at crude oil. Big movement in crude oil following, the market dropped initially today. Crude oil is now obviously bearish. This is going, and we talked about short-term bearish signals. We've broken the as you can see, the moving averages. Hence, I expect crude oil to decline. Sure, can we pull another bear flag pattern and retrace a portion of the move back to the 20-period moving average before that next leg lower? Yes, we can, but crude oil is going to go lower, and let's take a look and zoom out as to where we can go. Right here, so far, we're at the 50-period moving average on the weekly chart. Can we retrace a portion of the move back? Yes, we can. We dipped over 4% today. We can certainly get 1% or 2% back tomorrow, right? That's certainly possible. But what's the long-term trend? Crude oil looks like it's going to go lower, and that's that, right? Just based off of today's movement. I'm actually interested to see where we will close on Friday. That would be even a more interesting fact. Can we recover a portion of the move back? But that's for you guys, 4/CL. So if you guys weren't in it already or shorting crude oil, DWT would have been the ticker of choice. Now that's moved up 14% today. I would put a question mark as to whether you would enter right now. But here's DWT or inverse crude oil. If you guys were looking at this pattern, here's the 10-day, 30-minute chart, right? This is a pretty much corresponding. If crude oil goes down, DWT goes higher, right? And as a matter of fact, you guys can see, here's DWT forming a bull flag pattern, right? Whereas crude oil was doing what? Bear flag. You see this over and over again on certain charts, and that's what you're seeing right now. 4/NG. Okay, so here's natural gas, and I remember talking about natural gas in terms of a topping pattern. And so you might be like, well, Kevin, today natural gas pushed higher. Yesterday it went lower. Today it went higher. What does this all mean? This is a topping pattern, right? This is similar to SPY where it was a bottoming pattern. Does a bottoming pattern mean we're going to go lower and then hit the low and then boom, bounce up and then we're all, off to the races to the upside? No, right? After a major move higher, of course we can fluctuate back and forth before the eventual move down. Here's natural gas, right? We made up a portion. Can natural gas come back to 3.300? Yes, of course it can. Does it have to? No, it doesn't. But my point here is that here, right, you guys can see here was the topping pattern. How long did it take for natural gas before it came down? This was a period of what, 2 weeks, 2.5 weeks? Quite a while, right? Almost a month, right, of consolidation before we came back down. Here, right, so far, around 20 days, right? We're getting to that point, but certainly natural gas can go higher in the near term. But what's the long term? It should be to the downside based off of this pattern. So that's natural gas for you guys. If it moves higher, great. We'll have to reevaluate it if it goes higher. I have a resistance line up there that we haven't hit, right? If we hit that top and then we come on down, that's possible too. But that's why I presented to you guys the scenario. When we're going down, you want to judge what happens if natural gas. Are you going to leave your short? If you were shorting natural gas, if it bounces up, if you were entering in this red candle area, right, you have to evaluate what you would do. And hopefully that's why you wouldn't allocate 80% or 100% of your account into a single position due to this very reason, right? It's going to make you uncomfortable if, for example, you went into DGAZ or inverse natural gas and for you to lose 7% today. That's an uncomfortable, even though long term, it's still on your side, short term, you will be very uncomfortable losing 7% of your account. So, monitor that accordingly. 4/GC gold futures. So gold futures, we were all talking about, everyone's talking about that push higher, right? We're ready for GC and gold futures to push higher because we've broken over. And today it really tried hard to push over. And it didn't make it. As a matter of fact, let me take you guys to the intraday chart. I'm sure if you guys are in gold, you guys were already monitoring this, but right, we pushed to 1243 before we came down. And so what's the big deal with this, right? What's the big deal with gold right now? Gold is still consolidating. Can we push up tomorrow? Yeah, we can, right? Yes, we can. Of course, we can push up tomorrow. Gold is bullish. The only thing I want to caution people on is, I would place caution chasing a trend. I feel like a lot of traders love to chase. They see the uptrend and then they chase. For example, the markets are pushing significantly higher and then they chase. And then what happens? You're caught in the wrong end of the short-term spectrum, and then the markets bring you lower and your account, there you go, right? Or same thing with leaving positions. When the market's dipping so much, they leave their position, and then that's when the markets recover. So I just want to place caution in both scenarios, but Forest SGC still looking good, still looking bullish. Didn't make it all the way today, but of course we still went up almost 0.75%. That's pretty good, right? In the big picture. So, all right, we've got a lot of tickers to tackle. So let's take a look at the tickers submitted on the chat group. So we'll take a look at first of all LABU, or this is this is the ETF that looks like biotech. Now LABU has been falling significantly with the markets, right? If the markets are falling, chances are biotech is falling. It's been bullish for a long time. So we're at, you guys can see we hit 5308. Now, what's the big deal with this chart? Well, right now we can't really see much, right? Let's take you guys to the weekly chart. This is obviously on a downtrend. So, once again, you guys can see the support area is around $53 to $54. Where did we bounce off of today? $53 to $54. So, if you guys were looking into a position, where's your possibly best entry area? Possibly 56 to 53. This is not advice that you should go into LABU at that time, but that is an area where you could manage your risk. This is overextended, oversold, and surely we could have a bounce up if markets recover. I do expect markets to recover, whether it's this month or next month. Whenever it occurs, I expect biotech to push up as well. So this is a good one to look at. Right now, we've gone up a portion of the move, right? Can we come back down? Of course we can. Of course we can come back down and to this area. So keep that in mind. Thank you for your call out, LABU. All right, let's take a look at a couple others. Samuel, we'll tackle your comment, which is, what is it? BAC, Bank of America. So Bank of America with the banks, and we see banks kind of selling off as well with the market. So that is a question mark in our head, of course. But what is Bank of America doing on the weekly chart? So far on the weekly, just note that this candle hasn't fully formed. That's the first thing, right? And the second thing is we are, we've gone up significantly. We could be forming a bull flag pattern, right? A bull flag pattern for Bank of America before it pushes higher. So the thing about this is, if you're looking at this chart, you might be thinking, maybe right now this is a good entry area. But you, of course, correlate with this with the markets, right? Correlate this with the markets. Correlate this with the yearly chart. Yes, we've come down. Yes, we are a little bit overextended. But you have to evaluate, what is the general market doing? And is that going to push higher? And once we get that confirmation of that pushing higher, financials might be already pushing higher by that point, but we're in a good vicinity. At the very least, if you got in at this low area, you know where you're wrong, right? And hence, if you wanted to put a stop loss on Bank of America, then you could. I talked about Bank of America in the past. This is a solid stock. Taking you guys to the 3-year weekly chart, right? This is solid. Right? And the thing about this is, you hold this for a long time, period of several months to years, it's going to go higher, right? But in the short term, if you're trying to swing for 2 to 3 days, that's more uncertain, obviously. So thanks, Samuel, for your call. All right, so K9, we have RYPPF Ryu Apparel. Okay, so what's going on here? So for this one, I don't like it. I'll tell you why. Look at the volume here. Here, this is a daily volume, and we have ticks that's only 1,000 shares, 358 shares. That's no good, right? There's no interest in it. There's can be too easily manipulated. Short term, it's moving lower. So, this one doesn't look good. And plus, you can see this really sporadic movement. Hype, dump, right? That's not what you want to see. You don't want to be caught in a stock like this, in my opinion. This is in the OTC, so you want to be very careful if you're looking at this one. Thank you for your ticker call out, K9. Let's take a look at VRS. So VRS, this is Verso. Yeah, so same thing with this one, right? Not same thing, but you can see this is an up move, consolidate, up move. What do we need to see? Well, we need to see consolidation. How long could that take? It could take a period of 1 week. It could take longer. This is overall, it's a good trend, but where's the 20-period moving average? Still a little bit further away, right? Let's wait for it to come and meet the price at some point before looking at this one. But overall, this is a good trend, right? This is a positive trend, and I like the your eye on this one. So good job. And let's take a look. Okay, so Mike, I had to get out oil until I see it go back up. I did take a small position in gold. Thank you for these videos. Good job. You made good decisions on both, I think. And, one thing is, preventing losses or extra losses is almost the same thing as making money, right? It's not the same thing, but you're preventing losses. That is also a great tactic. So great job, Mike. Justin... so you got lost in my video after I talked about Activision. So I think when I post the tickers down below in the description box, I post it in the order of most of the time, how I announce it. So it will always start with SPY and then TVIX and then so on and so forth. So if you can look at the description and then move on with the video, that should help you. Thank you for your comment and welcome to the channel. Hope you stick around. Synthartist, I talked about where I think the markets will be going. Okay, so George. And finally, actually, last one I'll tackle today is PayPal. PayPal, we talked about this one, how, if markets are pushing lower, PayPal is going to have a difficult time pushing to all-time highs. From what you can see today's movement, markets recovered. PayPal was actually, this was one of the stocks that, initially went lower, right? Gap lower, like with the rest of the markets, but it started pushing higher through the rest of the day. Even when markets were unstable, PayPal was pushing higher. So this is a good sign. I like this sign. And PayPal looks strong. I expect PayPal to continue on higher. Can it come down short term, just drip a little bit lower? It can, but just based off of today's movement, I think PayPal is going to have higher prices to come just from today. So I like this trend. Where's our resistance? Our resistance is going to be around 92.64, and there's still a bit of room to make up. So I like this one. Thank you for talking about this one. I think someone on Facebook commented on that. So you guys can please like this video if you enjoy these videos. And of course, check out the course, check out the Facebook group. Facebook is free, and a lot of people talk and chat with me on that group as well, and instant message me. So keep that coming. In the meantime, we'll be monitoring markets every single day for the rest of the month. Of course, there's high volatility, very interesting patterns. If you're a day trader, great. If you're a swing trader, pinpoint where your entry is. And I will see you guys tomorrow for another Stock Talk. Until then, happy trading, and see you tomorrow.